Good morning. Welcome to binary.com here. Welcome to the weekly live room starting at 8 a.m. UK time. Thank you for joining us today on this very first session of the new trading year 2015, the 5th of January today, where we take a look at what, of course, we can expect for the entire year. In fact, if that is at all possible, but at least part of this year. And, of course, interesting information we can derive and try to understand from the last year, in fact, from the past 2014. So that's where will be our main focus, what happened in December and how will that affect January, and what happened in 2014 and how will that affect part of 2015. Before we do that, actually, though, please be aware of this disclaimer. Trading for exchange and other financial markets is considered high risk and may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is for educational and informational purposes only and is not intended as advice. And by continuing watching this webinar, you agree, or video, you agree with the disclaimer mentioned here, and you could always request a copy by contacting binary.com. Thank you for your attention. You can always take a look at the recap, or the video I should say, of this live session by registering via blog.binary.com/weeklytradingroom. And today's focus, of course, is always on these 5 particular pairs. So let's take a look at those. Here we go. We have, first of all, let's take a look at the euro dollar. Now, of course, as I said, first of all, let's think about the 2014 trading year. We've seen recently a very big acceleration of downside. How much of an acceleration is apparent when we take a look at the monthly chart? And you can see a trading year of last year that started around 135, had some upside, but couldn't break 140, and then fell very fast to 120 basically in the second part of 2014. So we have obviously a very bearish, a pretty sizable bearish candle on the euro dollar, which means dollar strength and or euro weakness. And if you look at the particular close of the 2014, it was literally only 2 to 4 pips off of the low. Now compared to a candle that was almost around 1800, 1900 pips, 2 to 4 pips, of course, is very, very small. Its percentage is actually 0.1%. It's 0.1%. So that means that the close was virtually at the low. What does that mean? That means we have a sizable bearish candle and there was no bounce at the end of the year, which means a lot of bearish pressure in 2014. With that said, the chances, I already said, if that happens, there's a 90 to 95% chance, and those I think were a bit conservative still, chance of this year breaking the low of last year. And it has already happened, in fact. So that prediction already is true. And it has already occurred, in fact, faster than I probably expected. So that has already happened. Now, how far and how much bearishness could we still expect? After already we've broken last year's low. I think more, to be honest. I think that the few hundred pips, the 200 or so pips we've seen so far already in the last 1.5 days of trading is still just a small part of what we could expect. Yes, 200 pips already in the first 1.5 days of the new year is already a lot, but ultimately I expect more. I expect the price to go down to 115, 113, 110, perhaps even parity. Throughout this year, all right. So, but anyhow, in the more intermediate future, you can see that price is trying to push through this support trend line here, trying to push through the wedge. Of course, as we know, if it starts pushing through the wedge, then some interesting targets come into vision, like the 113 minus 272 target, and even the parity, which is the minus 618 target. If we zoom into lower time frames, then we can, at 4 hour, for instance, we can put a fib on this swing high, swing low, and I would expect downtrend to continue after price retraces back to 120.20, the 38.2 fib, for instance, 120.50, the 50, 120.86, the 61.8 fib, even 120.30, 121.30 with 78.6 fib. Any of these fibs, I'm looking for some candlestick patterns as a price to respect those levels and then turn around for more downside. Now, those would be my entry potential spots when we see candlestick patterns at these fibs. If, in spot market, I would be looking for a target at 117.50 for the moment. From a time perspective point of view for options, I would be thinking more about the typical 5 to, 6 to 13 candles, excuse me. 6 is a bit safer than 5, I think. Probably 7 to 13 is maybe a tad better even. And within that, those number of candles, I would expect price to be back into a downtrend if we do see candlestick patterns at these fibs, basically. So euro dollar 2014, ultra bearish, expecting that bearishness to continue with pretty high, interval of confidence here. Actually already has happened, but expecting that actually to continue for more downside. Now, the pound dollar is really no different. The pound dollar yearly candle is ultimately very close and similar to what we've seen on the euro dollar. If we look at the monthly chart here, we can see that, first of all, the second half of 2014 was just as bearish on the pound dollar as on the euro dollar. There's just a slight difference here, is that the first half of 2014 had a bit of more bullishness than the euro dollar. So although the euro dollar had basically a very bearish candle, I'll show you, it was something like this, for instance. That's the euro dollar candle with a bit of a wick here and almost no wick at the bottom. That's the euro dollar candle, EU. The GU is a bit different because, first of all, the wick at the top actually is close to half of the candle. That's one difference. Then there is a bit of a wick at the bottom. That's another difference. Whereas the euro dollar basically had no wick at all. The pound dollar had a bit of a wick at 95 pips or so at the bottom, which is roughly about 3.8% a wick at the bottom. Not a lot, believe me. It's still within the 5%, which is very, very strong. Anything within 5% is ultra strong. So where the euro dollar had a wick of 0.1% at the bottom is, of course, extremely strong. The pound dollar had 3.8%, which is still very strong. It's not ultra strong, ultra strong like the euro dollar, but still very, very strong. So that is a bit of a difference here. Hardly any wick at the bottom here, just a small wick, very small wick, I should say, but a very big wick at the top. So the candle looks more like on the right, the euro dollar looks on the left. Small difference. Both are bearish. Both indicate bearishness, though. And indeed, this year has seen actually more fall in the pound dollar than the euro dollar. January has already seen a 350 pip fall on the pound dollar so early in the year and so early in the month. So ultimately, I would expect price to challenge this bottom here at 148. That is the current bottom on the weekly chart. If that breaks, we could see some price fall probably into the lower 140s, in fact. Until that point, though, I mean, we have no reason to look beyond 148 for the moment. That's the target at the moment, 148.50-ish. And if we look at the lower time frames, there's no reason not to put a fib, I would say, on this swing high, swing low. And I would expect the price to turn at any of these fibs for more downside trend continuation, basically. All right, so that's what I'm looking for here. Same story, basically, as the euro dollar. And expecting bearishness to continue after some retracement. And just a very, very bearish year, very bearish start of this year. Bearish weekly candles, monthly candles, daily candles, everything, you name it, you got it in bearish mode. And ultimately just looking for some pullback. Probably the 38.2 fib, 50 fib seem very likely at the moment for further downtrend continuation on this pound dollar. And if we look at the smaller targets here, we see, for instance, 151.38, 150, and then we get close to the 148.50, 148.15 level here, as you see indicated by the red line there. So those are the targets here for the pound dollar downside. But ultimately, both euro and pound dollar, in my view, in my opinion, just looking at these levels, very, very bearish. Expecting that bearishness to continue throughout basically this year. Originally, I was expecting actually some consolidation in January, but doesn't seem like that is very likely after we had a pretty strong push throughout the holiday season, in fact, relatively at least. Dollar yen, slight difference here on the dollar yen. Yes, the dollar yen is very bullish, just like the euro dollar and pound dollar downside. We have dollar strength here against the yen, which just means that the dollar yen is moving up. And if we look at the monthly chart here, it too basically opened up somewhere here at 105-ish, had a bit of a downside down to 101-ish, but then upside again in the second half. So there was a big consolidation in the first half of 2014, but big strength on the second half 2014. One small difference, two small differences here, is the fact that there was a pretty big wick here at the top, 200 pips, which was almost 10% of the candle. Now, of course, 10% is still pretty bullish. 10%, 9.5 to be precise, is still a pretty strong close. But of course, there's a substantial difference between 9.5 and 3.8 and 9.5 and 0.1, like the euro dollar and pound dollar. So, yes, there is a bit of more of a pressure here towards the end of the year on the dollar yen. And that pressure, you can see the difference. This year, we've had almost no candle. I mean, the difference between high and low this year is something at about 100 pips. We didn't break last year's high. The euro dollar, pound dollar both have broken their low, and with a substantial amount so far already. The dollar yen has not broken its high. So there is a bit of a difference, a bit of a slower movement on the dollar yen, not much of a dollar strength as yet, and the enthusiasm is not as high as against the euro and pound. Will, therefore, the dollar yen be able to break last year's high? Yes, I still think that's very realistic because although the close was not as close to the high as the others were to the low, I do think that it's still a very bullish close, and I do expect the high to break. But what we could probably be a bit more cautious is the fact that it could be a slower break, and it could take longer for the break to occur. Perhaps not even this month, perhaps maybe next month even. It could be slower. So that's something that makes me a bit more cautious of trading the dollar yen now, and not, let's say, on the euro or pound dollar. Despite that, though, despite perhaps a bit more cautiousness, it is kind of making a triangle here. So if it does break through this resistance line, it could still be worth trading. I might rather wait for the break, a good 100 pip break above this top, and then wait for the pullback instead of trading it right away. Something like this, break, let it break by 100 pips, pull back and take it at the pullback level like that. The other option could be that it just actually retraces a bit more. For instance, it could retrace back to, on the 4-hour chart, back to the 38.2 fib. Wait, this is the other fib, sorry. On the daily chart, excuse me, to, for instance, 113.90, which is about 114, close to 114 there. That could, of course, be a very interesting long area as well if price gets there. Well, it will depend if price is able to break the resistance or resistance hold and send price back to 114 indeed, or even 117 for the moment, 117 or 114. So dollar yen bullishness is likely. The question is whether it's the right timing now. I don't think so now. Could be soon if price breaks or if price retraces back to the support levels. It could also take quite some time longer before that happens. So a bit of a wait and see mode on the dollar yen. But in the long term, expecting bullishness. Audio is the same story here. If you look at the long-term story here, basically, when we look at last year's candle, price opened up about 80.087. Price went up some 700 pips, 800 pips in fact, to 0.95. Couldn't break that level, then went spiraling down and retested the 81, or 80 level, and ultimately closed bearish. Certainly. A pretty big wick at the top, in fact, compared to the body of the candle, but ultimately, yes, bearish. So, with that said, expecting Aussie also to continue lower, especially if we break below 80, especially if we break below 79.50, which is the 61.8 fib. And if we do break those levels, then we'd expect price to retest the lower 70s level, in fact, on the Aussie. So here too, expecting dollar strength against the Aussie, just like I'm expecting against the euro and pound. And kind of the same story here across the board. 4-hour chart looking for a hook back. for more downside on the Aussie, looking for price to go up to 81, 81.50, 82, and expecting price then to follow suit and make that downside continuation at least down to 80. Now, when of course we get 80, that's always a cautious level to be aware of. But if we then break below 80, then of course we could expect, as I said, even more downside to continue. All right, so that's something to keep an eye on the Aussie as well. It could be very interesting for further trends when we break below 79.80, 79.50. Next on the list, XAU-USD. Well, if we look at the entire year of 2014, we had a kind of a doji. In fact, I mean, we opened here at about 12.46. We actually closed at about 11.80. So yes, I mean, technically a bearish candle here of about $60. But I mean, if you look at it in the scope of the entire yearly candle, the whole yearly candle was about only $270 from high to low. So it was a very small candle. Therefore, I'm not attaching a lot of meaning to the fact that it was bearish. It's more of a doji. It's more of an indecision candle, if anything, and therefore not so reliable, I would say, in the information it provides. I mean, if you look at the context, of course, we do have a lot of bearishness in 2013. That still weighs in, but not as much as it would weigh in as last year. Still a bit, though, for this year, so we could expect maybe some bearishness to continue. Last year's indecision candle kind of makes the probability of downside somewhat less, obviously. More indecision, more question mark for this year, I would say. Ultimately, we are still in a downtrend, and anything below 1340 here, 1350 is still in a downtrend. And anytime the price gets close to that, it could still be a very interesting level to look for more bearishness and a further fall, perhaps, from that zone. At this point, I really don't have any preference. Last month was a bit of a wick at the top, but also ended bullishness. So I'm more cautious on this XAU-USD for the moment until I see more information on this pair. So we'll keep an eye on XAU, of course, USD throughout the year. You know, keep an eye on that, see how it develops, and see if that particular forecast will change, and if there are any setups that make sense after last year's small candle. I mean, if you compare it to 2013, we had an open of about 1670. The high was not that far off, 1700, and ultimately closed at around, let's see, closed here around 1200. So it was, of course, a pretty big $500 to $470 bearish year. Now, 2014, as I said, the open here, 1249. The close, once again, 1180. So, you know, very. Let me check that again. The open. No, that open is actually lower. It's 1204. I made a mistake. 1204 and the close 1180. So there was only actually a $20 bearish candle. Excuse me, I made a mistake. $20 bearish candle, in fact, out of a candle size of about 260, if I remember correctly here. Yeah. So actually, it is a doji candle because it's about 10%. Of the candle is only the body, so anything 10% or less is more or less a doji. So $20 downside within an entire candle of only 260 is indeed a doji, and shows a significant indecision, more than I expected, because I measured the open incorrectly there. So only $20, not $60 candle. So very big indecision on the commodity gold side things. Throughout 2014. All right, thank you for joining us today. Appreciate it. And once again, you can register and get the recording by signing up through blog.binary.com/weeklytrading. I wish you all happy hunting, very good trading, and an awesome trading year of 2015. Cheers.